The pandemic created by the coronavirus, COVID-19, impacted global economies and individual lives. Millions died as a direct result of the virus. Countries found themselves caught up in a whirlwind of information and disinformation that created uncertainty within households, businesses, political factions. This study explores interactions between COVID-19 cases, political responses, and exchange rates. So in this video, we are going to discuss how is COVID-19 impacting global currency. The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. The COVID-19 pandemic has had a significant impact on global currency. The pandemic has caused major disruptions for exchange rates and global capital flows. The impact of COVID-19 deaths on exchange rates has been analyzed in 6 major COVID-19 hotspots, including Brazil, China, India, Italy, Turkey, and the United Kingdom. The study found a unidirectional long-run causality running from COVID-19 deaths to the exchange rate, with a positive and significant coefficient of COVID-19 deaths in explaining the exchange rates in the long run. This means that countries with higher COVID-19 death rates experienced a depreciation of their currency relative to countries with lower death rates. Another study found that the pandemic created by COVID-19 impacted global economies and individual lives, with millions dying as a direct result. The study also analyzed the pandemic's effect on exchange rates in the foreign exchange market. It found that the pandemic caused a significant depreciation of the currencies of countries that were more severely affected by the virus, such as the United States, Italy, and Spain. A significant correlation between bilateral exchange rates and 2 pandemic-related shocks between the 2 countries was found in a study of international currency markets. The study argued that the study of foreign exchange rates is appropriate for demonstrating the non-trivial role of the COVID-19 pandemic as a study on foreign exchange market efficiency during the COVID-19 pandemic found that the pandemic had a significant impact on the efficiency of the foreign exchange market. The study found that the pandemic caused a decrease in the efficiency of the foreign exchange market, which means that it became more difficult to predict future exchange rates. Another study analyzed the impact of the COVID-19 outbreak on the currency exchanges of selected countries. The study found that the pandemic caused a depreciation of the currencies of countries that were more severely affected by the virus, such as the United States, Italy, and Spain. The study also found that the pandemic caused an appreciation of the currencies of countries that were less severely affected by the virus, such as China and Japan. Overall, the COVID-19 pandemic has had a significant impact on global currency. The pandemic has caused major disruptions for exchange rates and global capital flows. The impact of the pandemic on exchange rates has been mixed, with some countries experiencing a depreciation of their currency, while others have experienced an appreciation. The value of the US dollar changed during the pandemic. The value of the US dollar has changed during the COVID-19 pandemic. The US dollar has weakened during the pandemic, losing over 1/10 of its value relative to the euro, as well as losing ground against other prominent currencies such as the yen and pound. This is due to a number of factors, including the Federal Reserve's decision to print trillions of dollars in stimulus money, which has increased the supply of dollars and decreased its value. Additionally, the pandemic has caused a decline in economic activity in the United States, which has also contributed to the dollar's decline. The weakening of the dollar has a number of implications, both positive and negative. On the positive side, it makes U.S. exports more competitive in international markets. On the negative side, it makes imports more expensive for Americans, and it can also lead to inflation. The long-term impact of the weakening dollar is uncertain, but it is likely to continue to be a significant factor in the global economy. The study you mentioned found that the exchange rate between the US dollar and the Chinese yuan has also been affected by the pandemic. The yuan has strengthened against the dollar, which is likely due to a number of factors, including China's relatively strong economic performance during the pandemic. The The strengthening of the yuan could make Chinese exports more expensive for U.S. consumers, and it could also lead to inflation in China. Foreign exchange rates are a good indicator of how the global economy is responding to the COVID-19 pandemic. When countries have strong policies in place to protect their citizens and businesses, their currencies tend to be more stable. However, when countries have weak policies or are not prepared for the pandemic, their currencies can become unstable. This is because investors are more likely to invest in countries with strong economies and stable currencies. The COVID-19 pandemic has caused a lot of uncertainty in the global economy. This uncertainty has led to a flight to safety, which means that investors are moving their money into assets that they believe are safe, such as the US dollar. This has caused the value of the US dollar to increase relative to other currencies. COVID-19 has had a significant impact on exchange rates. Several studies have analyzed the impact of COVID-19 on the exchange rates of different countries, including the US dollar during the pandemic. Here are some of the findings. The US dollar has weakened during the pandemic, losing over a tenth of its value relative to the euro, as well as losing ground against other prominent currencies, such as the yen and pound. This is due to a number of factors, including the Federal Reserve's decision to print trillions of dollars to stimulate the economy, which has led to inflation and made the dollar less attractive to investors. Additionally, the U.S. economy has been slower to recover from the pandemic than other economies, which has also contributed to the dollar's decline. The weakening of the dollar has a number of implications, including making it more expensive for Americans to travel abroad and making U.S. exports less competitive. It also makes it more difficult for the U.S. to repay its debts. The study found that the exchange rates of China and the USA have been significantly affected by COVID-19. The value of the Chinese yuan has fallen against the US dollar, while the value of the US dollar has risen against the Chinese yuan. This is due to a number of factors, including the different economic policies of the two countries, the different levels of economic growth in the two countries, and the different levels of inflation in the two countries. The study also found that the impact of COVID-19 on the exchange rates of the two countries is likely to continue in the near future. The study's findings are significant because they suggest that the ongoing effects of COVID-19 are having a major impact on the global economy. The study's findings also suggest that the exchange rates of China and the USA are likely to continue to be volatile in the near future. A study analyzed the impact of COVID-19 on the exchange rates of 6 major COVID-19 hotspots, including Brazil, China, India, Italy, Turkey, and the United Kingdom. The study found that countries experiencing a sharp daily rise in COVID-19 deaths typically saw their currencies weaken. Another study found that quantifying COVID-19 pandemic shocks is critical to understanding international currency market returns. Scaled by population, shocks from between-country differences in the number of weekly COVID-19 deaths are informative in predicting exchange rate returns. The study also found that pandemic shocks exhibit a much larger influence on US dollar-denominated currency markets than on the exchange of non-dollar currencies. Therefore, the US dollar has weakened during the pandemic, and other major currencies such as the euro, yen, and pound have performed better than the US dollar. However, the impact of COVID-19 on exchange rates varies depending on the country and the severity of the pandemic in that country. Commodity currencies have outperformed during the pandemic. According to a report by CME Group, commodity currencies have performed well during the COVID-19 pandemic. Commodity currencies are those of countries that are major exporters of commodities, such as oil, gas, and minerals. The report states that commodity currencies have benefited from the rebound in commodity prices since the initial shock of the pandemic. The Canadian dollar, Australian dollar, and Norwegian krone are examples of commodity currencies that have performed well during the pandemic. A study on international currency markets and the COVID-19 pandemic found that pandemic shocks exhibit a much larger influence on US dollar-denominated currency markets than on the exchange of non-dollar currencies. This suggests that commodity currencies, which are often non-dollar currencies, may have been less affected by pandemic shocks than the US dollar. Therefore, while there is no definitive answer on how commodity currencies have performed compared to the US dollar during the pandemic, this suggests that commodity currencies, which are often non-dollar currencies, may have been less affected by pandemic shocks than the US dollar. It appears that commodity currencies have generally performed well. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.